Should we buy or sell Pfizer? First off, read this disclaimer carefully. Then do your good deed of today by liking and subscribing. So I have a theme that I call dividend stocks. So we can find Pfizer here. It's in the healthcare business. 38% here from the 52-week low, but minus 14% away from the highs. Here is their website. Hope changes lives. We are in relentless pursuit of scientific breakthroughs and revolutionary medicines that will create a healthier world together. Yeah, this is their website. They also use stock photos, I see. Okay, so let's just jump into the charts. This is big picture weekly data points. So let's actually go way back here to sort of see the super big picture. It is pretty clear that Pfizer, it is very sensitive to recessions, and there's been some talk of recessions as of late. So you can see here that between the dot-com bubble and the low of the global financial crisis, Pfizer went down 76%. So it did have a bit of a rally here, but it met resistance at the red 200. Well, no, not actually the red 200-week moving average, because no, it's too far away. But it certainly didn't get above that moving average. But you can see that later on here, it did actually develop a relationship with that indicator. So what I find interesting with Pfizer at the moment is that we do have a solid trend line. I am a bit skeptical of trend lines, but every now and then we do get some that are a bit more clean, and I do think that this trend line here, it does connect these closing highs, and I think that as long as this trend line is in play, it is a level where we will see the bears add to their short positions, because they will do this, they will short, they will short, and they will short. So currently, just based on that trend line, I think that one could lean bearish. If we were to break above it, that would be a sign that the bulls are they have more in them. Let's look at the daily data points. So what I do see here that Pfizer, it is a bit time cyclish, but the duration of the time cycles have differed. That is where it becomes a bit more complicated, because occasionally you will find a security that trades in very clean time cycles. Other times you will have something like Pfizer that it had these very longer term, very nice time cycles, but all of a sudden they became a bit shorter term. Like this, you have something a bit smaller here, but we don't know yet whether this is something that will be tradable going forward. But anyway, we do have that diagonal trend line that I think is sort of like the key part of the bearish thesis. Looking here at an RSI and PPOs, we are in a very messy territory where there's not any like clean signals. Looking at longer term PPOs, the distance from the blue 100-week and the red 200-week moving average, we could definitively make the case that we are still very much, we are rather elevated. Looking at daily data points, we do see here that recently there's been a new sort of high level for RSI around here, and that's where the bulls get into trouble. So that is another interesting reference point. Another thing here is MACD. It is not sending a sell signal yet, but it is pretty darn close. You see here that it sent a sell signal here, and we did get that continuation to the downside. The issue with MACD is that it can be a bit slow in sending the signal. So if you use the MACD as a trading instrument, then especially if you have like a more abrupt move, then it can be very, very delayed in giving you the the signal to act. So basically you will have like a sell signal after, a 10% pullback, as an example. So the line in the sand is diagonal resistance. I give this one a -3. I am somewhat skeptical of diagonal levels. That is simply because different technical analysts can draw different lines, but I think that this line was very clean because it connected closing highs, and yeah, it was just rather clean. So I like this one. It is tradable. Just for the record, when I make these videos, then I go through a bunch of different securities to look for opportunities. So the things that will come up in this video is not going to be like a surprise to me. And the reason why I wanted to make a video about Pfizer in this case is because there were multiple data points with a certain directional lean, as it were. So here is the seasonality. So green is over the last 5 years, blue is over the last 7, and 10 the last, well, red over the last 10. And we can see here that there is some bearish seasonality here leading into mid-ish June. To the left here, we do see that June, it's a very weird month because we close higher 80% of the time, and initially you would be like, wow, that's super good, I'm going to buy a Pfizer hand over fist, but you need to look at the average performance. It's -1.5. So yeah, it closes higher 80% of the time, but on average there's a loss. So when we look at the last 10 years, June is a spectacular month. 80% of the time it closes higher than it opened, but on average there is a loss. And the last 20 years, that is sort of like where we see that June is one of the more mediocre months. We close higher 50% of the time with an average -1.1% loss. However, July and August are stronger, and they on average post gains. So we are still in the very early part of June, and we did see both to the right with that seasonality tool, and also to the left, that especially early June towards mid-ish June is favorable to the bears. So I do give the bears 3 here. The seasonality is simply in their favor, but the issue for the bears is that July can be more problematic. So there is a risk that there's going to be like a shorter term bear trade here and not necessarily a longer term. Let's look at the fundamentals. So Sachs, they have a number 3 hold on Pfizer, but an AVA value score, B growth, and D momentum. Industry rank top 42%, large cap pharmaceuticals. So this is a dividend stock, so it does give a 3% dividend, which is pretty healthy. It's a large company, $296 billion in market cap. So let's look at what the insiders are doing. So the latest move here from this insider, Denton David, it was accumulation. So he bought, sell. So throughout May, we have seen a bunch of selling from various executives. This is, the president of research and development, okay? The president of R&D, he knows a lot, obviously about, the future of this company, the pipeline, and so the guy who knows about the future, he is selling. That's interesting. Okay, so let's look here at the consensus estimates. So 23 analysts are covering the stock. And here you can see that I have been buying some watches recently. So I do have a Fitbit that is sort of like my daily driver, but I also bought, like a Casio watch just because, 10-year battery life is convenient. And my Fitbit is definitively not a 10-year battery. Okay. Okay, so the average price target is 7.42% above the stock price. Highest is 41% above. The lowest price target is 10-ish% below. So when it came to the fundamentals here, we had bullish points, we have bearish points. I will give the bears a -2 here because it's not simply that insiders are selling, but some of the key insiders that know a lot about the pipeline, and the pipeline is extremely important for a pharmaceutical company. And given that there was a bit of selling as of late, I'm going to lean a bit bearish here, but obviously the fundamentals were mixed. So we can see here that the price target average is 7.42% above, and when we use the measurement tool here from the current price, 7.42-ish%, so basically it means that yes, they do think that we will break out above these highs, but we will not make a new high here for Pfizer. Let's look at some correlations. So 78% with S&P 500, 81% with the healthcare ETF XLV. Then, interestingly, we only have 16% with the XPH, which is the pharmaceuticals ETF. Daily data points, 26% with S&P 500, 51% with the healthcare ETF, -9% with the pharmaceutical ETF. That's interesting. Then we have a mere 8% positive with the germ ETF, which is like infectious diseases testing equipment ish ETF. But yeah, the strongest correlation we do get is with the XLV. So it was a bit interesting. I expected actually the pharmaceuticals ETF to have the strongest correlation, but the facts are in. So these are weekly data points. It's a messy chart because we have pulled back to a level that could be horizontal support. That's true. There is something a bit supportish around here on the RSI as well. So that is what I see from a more bullish perspective. From a more bearish perspective, we have a bunch of moving averages above us, and these are very key moving averages. Looking here at the daily data points, it's a very messy chart. I mean, these kinds of charts, they can be very difficult to trade because you have to put in some kind of stop level, and you can see how jagged the moves are, up and down, very sharp. So it will close out all kinds of stop positions for both bulls and bears. It's just a very messy chart, frankly. I do see a higher high here on accumulation distribution, so there definitively are buyers. But from a technical perspective, it is messy. So here is the relationship between Pfizer and the XLV, the healthcare ETF. So Pfizer has been in a protracted downtrend, underperforming the XLV, but there is a but. And it is a bit fat as well, because this looks very rounding bottomish to me. That is potentially very much bullish for Pfizer. The issue here is that we now have to sort of break out, and the most recent attempt at breaking out above these key levels back here, that was this, and it didn't work out. We did see that Pfizer started to weaken against the XLV, and that was a very inopportune time. And throughout this downtrend, we have actually seen multiple would-be rounding bottoms. So you had this rounding bottom here that failed. Then we form a rounding bottom here. And here, I guarantee you a bunch of people were like, oh, we're going to break out, to the moon. But then it's like, oh. So, yeah. Because of that, there's going to be like exhaustion among the bulls. You're going to have a lot of people who got burnt. So Yeah, we do have a major potential rounding bottom, but given that the bulls have been abused so many times when they have tried to be a part of that pattern, it's going to be less predictive. Okay, at least it's going to be less likely that the bulls are going to be fooled again. Looking here at the seasonality here between the pair, we do see that Pfizer tends to underperform the XLV all the way into late July. So that is bearish for Pfizer. It means that from a seasonality perspective, if you are sitting there, deciding should I buy Pfizer or XLV, from a seasonality perspective, there's no reason to buy Pfizer. You will buy then the XLV. Obviously, you will look at other variables as well, but yeah. So now I'm looking at XLV, healthcare ETF versus the S&P 500, the king of them all. Yeah, this one is it's a bit noisy. It's a bit a lot of things have happened. What is a bit of a tendency though is that as we can see historically, rallies are very often followed by sell-offs. So you see that that's sort of like the primary trend here. So given that we now have seen a significant rally, that also pushed us into a high end of RSI. We see that previous times high end of RSI has called the temporary highs. So from a technical perspective, based on price and RSI here, there's reason to expect the healthcare ETF to underperform the S&P 500. So let's see whether the seasonality tool corroborates that thesis. So over the last five in green, blue in 7, and red in 10, over those time frames leading up into June, healthcare tends to outperform the S&P 500, but that marks a temporary high, and then we do see underperformance heading towards later July. So we are of course analyzing specifically Pfizer in this video. So even though we did see some interesting things when it came to the healthcare ETF as such, Pfizer is sort of like the one in the spotlight, and I will give Pfizer specifically -3 here on relative performance. So we end up with a -2.8. So the data is more supportive of a bearish thesis, trade ideas, than bullish. A key line in the sand here is diagonal resistance. We did find a pretty clean level there. And as long as that holds, I do think that it makes more sense to be bearish than bullish for this stock. 2 months after I publish, videos on social media, we did, these kinds of videos. That is when I do a bit of a review/audit of the trade ideas to figure out what went wrong and what went right. Those videos are exclusively published on this and this platform. So you must go there, subscribe there. So yeah, have a great week ahead, and stay tuned for more.